Hi, this is Allison Corbin with Big Sky Economic Development. And today we have Jamie Hovey, one of the senior representatives at WIPFLi for taxes. And today we're going to be covering the Paycheck Protection Program, or the PPP program, that so many of us have been hearing about and trying to work through as we understand the programs that are available to support small businesses through this COVID-19 disruption. And so to kick it off, Jamie, do you want to just give a quick overview of what WIPFLi does and your role there, and then we'll jump into the PPP program.
Sure, yeah. So I've been with WIPFLi for, about 6.5 years, doing mostly a lot of entity work. So you kind of start off with the individual, but a lot of entity work now. I do specialize in a couple areas, but for the most part, I try to keep it with just the entities and the relating individuals. Let's see, with the, I've been in Billings, Montana for, 10 years now? I think that's pretty close. So
You're
yeah,
not keeping count, so that's good.
No, I know. I'm originally from Wyoming, so it's not too far from here. It's something that I probably will end up staying here for quite a while. So
great. Well, thank you so much for joining us and bringing your expertise. I think we should start off with just the general, why are you encouraging your clients to apply for the PPP program, and what is it really functionally doing for their business?
Sure. So yeah, we get that question a lot, as if they should or should not be applying. Obviously, the first round is already gone. But yes, so basically the clients that are asking, it's helping them stay in business. A lot of this, the PPP loans, is helping them with their day-to-day functionality with their payroll costs, so their overhead with that. So keeping the economy going. We've ran some scenarios on if they actually should or should not. Most should. Obviously, there's some stipulations that require them to meet in order for them to be eligible for those. But a lot of our clients and everyone around, Montana do qualify with those small businesses. So we kind of help them through the process. It depends on which bank they're using. Local banks are easier to work with more. So they're going to their bankers, and their bankers are having them fill out their application, and then we usually review it and give them feedback, and or if we're helping them with some of their other items that they're needed from the bank, like their tax returns, we're able to provide those.
And so this is the program that they have to go directly to their banker for access.
Correct. Yep, they fill out the application and their banker will run through all of their qualifications.
Absolutely. And so what are some of those items? You said tax returns. Do you kind of have an idea of, if I'm a business and I'm going to the bank today, kind of what items do I need to collect to have that process go smoothly?
So if you have a relationship with a banker already, that's where it's gone a lot smoother than if you don't. That would probably be the best way to start. The other things, such as tax returns, they're going to need to verify your payroll expenses, which the PPP loan is based off of payroll. So that's what they're gathering the information to base your loan approval on. So 941s, which is your quarterly reports, those show the number of employees as well as how much you pay per quarter, for a comparison for the beginning of the process, and then they compare it at the end. So that's kind of a two-way street. Other things that they're asking for, also you can include your health insurance. So you'll want to make sure that you have your monthly statements or your annual statement for those. Retirement contributions. It's just, let's see, what else is there? It's probably the most ones. You can do unemployment, so they want to verify your state unemployment as well.
Gotcha. And so what term of time are they looking at for to determine what the payroll is for your business, and how are they determining your loan value?
So right now, there are kind of two different specified ways you can get your loan and what it's based off of. One is for the calendar year of 2019, so January through 12/31, 2019. You can also do the beginning of the year, and they specify that on which date you can use. It kind of determines if you were in business before this all started, or if you kind of started after. So it's not excluding those startup businesses that just started coming in or started paying payroll in 2020. So.
Okay. So let's talk a little bit about the funding. How much can people get? Like, how much of their payroll are they receiving? And how much of that actually has to go to payroll for there to be forgiveness? So just a little bit of the dynamics of how they're calculating that loan amount.
Sure. So I'll give you kind of an example. We have a company that they had went off of their first quarter payroll reports due to economic whatever it may be in 2019. So they had roughly 50 employees that they put on their loan application, and they had 100,000 of eligible payroll that was after the full calculation. So the bank came through, they agreed with all of the calculations, so they get the 100,000, and they're based off of the 50 employees. So in order for it to be forgiven in the current state right now, 75% of that 100,000 needs to be used for payroll cost. And that's starting from, this is one area that's kind of a little bit gray that they haven't come out with yet, but there's different language on if that starts on the date of the loan and 8 weeks after, or if they can go back to the February 15th and use that as their payroll. A couple of other things would be they say in the language that it must be earned and paid or dispersed after the bank has given you that the loan proceeds. So we're unsure at this point if